Hey Rebels, welcome back to the channel. So we have a lot to get through this week, so let me just dive right in. So we're currently consolidating here after this run up that we had. We were kind of expecting a consolidation because we had this strong run up, kind of overextended in the swing direction, as well as meeting this old resistance line. So there was a lot of confluence there telling us that we were going to see a slowdown and possibly a correction. And that's exactly what we've seen. And so far, it seems like a pretty regular correction. We have an ABC pattern playing out, A, B, C, very common in a corrective pattern. But I want to point out that even though there's a lot of fear in the news, we're still in strong territory. We're above this 50% tool, we're above this old trend line, and we even managed to just barely, at least on the daily, close above this swing bottom here and also close above the 100% or 100K level, which is a psychological level there. So it doesn't mean that we're done with the correction or that we can't see more downside, but I'm just saying we're in strong territory until we get below these levels and start seeing lower highs below these levels. We also have a double top in play that we've been talking about a while, and so I'll just kind of briefly review that again, projecting this move off of this here right there gives us a lot of confluence right here. This 1.5 or 150% move, it has a lot of confluence with this old trend line and with this 50% level here. So we were holding pretty strong on the 50% level of this double top. And then when it broke through, the next target here was the 100%. And we've seen so far we had some good buying step in. This higher volume here with that buying coming in could potentially in the very short term, this could be the very early days of seeing a structural low on this pattern here. So we'll just have to see how that develops. But either way, this whole time we've just been cool headed, knowing that, until we break these levels, we're not going to get too terribly excited. So even though we were all in for periods of time in anticipation of this consolidation breaking higher, now we're out, and I'll go over that in a little bit later as far as how our 5K challenge is doing. And so anyway, just still bracing for the potential move higher, and that's kind of where we're at there. One thing briefly I want to mention is we have a GAN seasonal date. If I pop this back onto the weekly, it would be very interesting to see if this seasonal date actually marks the structural low for this move. So we've kind of had this, I've had this for several weeks here, and there are early signs that it could potentially actually be the low, as well as the new moon, which is very new analysis for me, but we had this nice run up, especially on the dailies, a little bit stronger. When we were having this run up, it looked like things were definitely going to take off and breach these highs, and everybody was bracing for it. And in the back of my mind, and I mentioned it on the channel, I was like, well, we do have a full moon coming up, and that can often is in a choppy range, which is essentially what we've been in. We've basically just been in a range here, and oftentimes the full moon will mark tops and the new moon will mark the bottoms. It's a very strange occurrence. Like I said, I haven't done too much analysis on that, but it was something that prepared me knowing that, hey, this might not be it. And that's exactly what happened. And when we did get rejected there, then it was like, okay, well, then we're going to have a little bit more time before we actually break through. The other thing to mention on this chart is that we have dipped below our speed line here. And so I would like to see this recover a little bit quicker because, if we fade away from this speed line, we're just kind of seeing a loss of momentum. And that's not necessarily what I want to see at these levels. So the other thing I want to go into and mention is the USDT market cap, meaning how much stable coins are there in the market. And I just kind of wanted you to see how you can, how there's a little bit of confluence here, right? So as we see, this is Bitcoin on the bottom. So we see Bitcoin's price going up. We see USDT market cap go up, meaning more dollars in the system. And then as Bitcoin goes sideways, we can kind of see that selling off, meaning, the USDT is coming out. And as Bitcoin has been going up here, that's the other thing too, is Bitcoin basically going sideways, USDT market cap going sideways. And then as soon as we start going again, we see the market cap increase. The thing that I like about this chart is that even though we've had this downturn in Bitcoin, we've just seen a nonstop rise in the USDT market cap, meaning more dollars are coming in. So they might be sidelined, ready to enter the market. I just found that kind of to be a bullish sign. So, and then while we're on the subject here, I want to just see. So we've increased $12 billion in the USDT market cap. And I wanted to use this as a quick opportunity to discuss market depth. A lot of people think that, if you double the market cap or you double the price, then you double the market cap. And what people think is, for example, and we'll round this to 12 since we have this, that's kind of an easy number to remember. This $12 billion market cap, people think that you need $12 billion of market cap increase to double the price, meaning that you would basically have to see all the money that just came in since the flow into hyperliquid in order to see the price double. And that's just not the case. And so what you can do is you go over here to the 2% depth. And I chose the largest exchange. And when I did my math, I think we're at $155,000. We'll move the price 2%. So in order to double the price on this exchange, you only need $7.75 million. So $8 million. So it's a lot easier to get that $8 million out of that 12 billion than use the entire 12 billion to increase the price double. That's just a really quick tidbit that I wanted to throw in there because it's a misconception out there. People think that in order to double the market cap, I need double this amount of money to increase the price, double, and that's just not true. You have to go to the 2% depth, and now as the market cap increases, the order book will grow, and then this depth, it will take more money to move that 2%. So this isn't an exact calculation because as we increase, like I said, as we increase the order book, it will take more money to increase the price. But what I'm just saying is that it does not take $12 billion to double the price of hyperliquid. So quick little tidbit there. Let's keep going through here. Like I said, I have a lot to get through today. Why don't we hop into the altcoin market here and we can just see, why haven't we made money in the altcoins? And I just want to zoom way out here. And it's because we've been in a structural bear market for several years. So there's been almost no opportunity to make money in the altcoins this entire cycle, which is a little bit different than last cycle because you can see after, the bear market was a little bit shorter and we had kind of more steady grinds to the upside. There were larger areas to be making money. But this bear market in altcoins seems to be a little bit longer where we've just bled the whole time. And you can see that in the Bitcoin dominance where it's just risen the entire time. So there hasn't been as many chances to hop in, and buying and holding is clearly not a good strategy for this particular cycle because any rallies that we have, it just gives it back to Bitcoin. Any rally we have, it gives it back to Bitcoin. Rally we have, gives it back to Bitcoin, which is why, if you've got into the altcoin space and you've made some money and you've given it back, don't be hard on yourself because that's just been the nature of the game this whole time. I've done it, thinking that, like the cycles before, oh, I'm just going to buy these solid alts and hold them for the entire cycle. Now we'll have to see. I mean, this could break out and we could go bonkers and we may have been right, but we may have had the timing wrong, right? But there again, if your timing is wrong, then you're wrong. And you have a lot of missed opportunity cost because you could have just been into Bitcoin the entire time and you would have seen price appreciation for most of the cycle. And the drawdowns would have been significantly less because altcoins draw down 60, 70, 80%, whereas Bitcoin draws down 30%, which is still, pretty volatile, but a lot easier to stomach. So anyway, I just wanted to mention that, like, hey, let's not feel too bad about not making crazy gains in the altcoin space because we've just been in a bear market. So Raoul Pal talked about this in a video, last week, I think. And based on their market breadth analysis and different analysis that they do, they're seeing it's a different chart than this, but basically they're seeing that they're seeing a structural low form on those altcoins. And so that's a little bit of hopium for the coming weeks and months that we may have seen an end to this. One thing that I was hoping for is to see this descending wedge break to the upside. So far, we've just peaked to the downside. This is all short term, but we may need to return down to these levels here, which is where we've seen the altcoins bounce against Bitcoin, pretty much every time. So it's not going to surprise me to see actually further downside in the altcoins before we get that leap higher. And you can see that in the USDT dominance. I've marked up some levels here. Well, actually, let's see. Where did I mark it up? Where have I marked it? Yeah. So for me, the line in the sand to get, more excited about altcoins would basically be a break above this level. Above this level, to me, is significant, and we can expect to see, more price appreciation for the altcoins. Until we get above this level, not really not really too excited. I would say if you're going to be in altcoins, you want to be in the majors, the large altcoins like Sui or Hype or Bitcoin, and anything, this excludes the top 10. So if you're not in the top 10, you probably have some more pain to the downside. Like I said, on this chart, we may be heading down to this level before we see any prices rise. We have fallen below this trend line, not a great sign. So for me, the line in the sand is this right here, which I think I actually found probably on a monthly swing chart. If you zoom out even farther, this is a pretty significant level on the monthly chart. We have a lot of interaction with that, and it became resistance recently. So, in relatively short order, we would want to see this reach these levels and try to, make another jab at it. And then USDT, yeah, here we go. And then USDT dominance is the same but in reverse. And if we get a break of this line here, that's the altcoin season. Everybody's been waiting for this altcoin season, but as you saw in that altcoin chart here previously, we haven't been there. It's been in a bear market the whole time, and we've gotten, a few weeks at best of upside in the altcoin space. So let me draw another trend line here. Yeah, so that's the only good news I can say for here. And it also kind of depends on how you draw these. There's a few trend lines in here. In fact, I drew a trend line earlier where, if you were to draw it from this high right here, luckily we've closed below it. But anyway, this I say would be a line that we would want to break, or excuse me, well, this is one we would want to hold, excuse me, because we're reverse here, we're invert for the USDT dominance. So let me just kind of go back into the weekly. We've seen a nice rally here, which is why we've seen the altcoins bleed, because again, we have this all-time support line here, and it's just held support the whole time. We broke below it one time and very quickly, aggressively shot back up, which is when we had, this was, I think, November, December, and then just gave it right back. So all that money we just gave it right back. So we're just not there yet. And I wanted to dive into some market alpha here and maybe talk a little bit about some trading results that we had. So trading results, I wanted to talk about the account. Full transparency here. I posted this here. For the 5K challenge is now risk-free, meaning that the original 5K that I put in this account, a long time ago, I've since withdrawn, and we have a 5K account left because I basically got out with a 2x. So it seems like, well, what the hell, we had a 4x. Why the hell didn't you take the 4x? And it is because, that's the name of the game. We were prepared for prices to go higher. We knew the volume was low. And so we wanted to be in the market if that was the case. And that wasn't the case. And when it went against us, we got out with a 2x instead of a 4x. So that sounds, where that might seem like a failure, it's actually pretty good. We doubled our account in a month, and we still have the cash on the side in preparation for that alt season to kick off, for that squeeze to happen, and for prices to go higher. I think that still will happen. I think that's still in the making. We have global liquidity on the rise, and that's just typically, I can't see this cycle ending without some degenerate gambling, just like every cycle that there ever is. Basically, you see a blow off top where things get absolutely crazy, and then we head into our bear market. So, and then the other thing I want to mention here too is that it would take nearly 3 years of great stock market gains, like 33%. It would take 3 years to double your account. Now, that's not quite exactly accurate because you are compounding on the way, but it would take you well over 2 years, which is just regular stock market returns, to double your account. We did it in a month. So while it seems like, oh my gosh, we did a 4x on the account and now we're only sitting with a 2x, like we did terrible. No, we actually did pretty good, and we managed our risk. And most people, like I said, when you look at that chart, you give it all back. Well, we didn't give it all back. We got out with a 2x, and now I was able to use that $5,000 to fund my life and pay my expenses. And now we have another $5,000 that's risk-free. Now it seems like, oh, you just started you're where you started. Well, not really, because now that $5,000 that's in that account isn't my money. I got my money back. I was able to use that and pay for things in my own life. And now the $5,000 that I have to do this again, and that was with low volume in the market, and we didn't really go anywhere. We went up for a couple weeks, right? So we're waiting for an altcoin season where we go up for several months. So we can forex an account in a couple weeks when the market was weak and had low liquidity. Imagine when liquidity comes back in, what we're going to be able to do with that same $5,000. If we can turn $5,000 into almost 20, I think it was 18,000. Well, I think we're in pretty good shape, especially since, now I basically have small positions in the majors, which I haven't posted yet. And then I wanted to go over the market analysis, some market alpha that I've posted recently, just because there's a lot of good alpha in here that I just want to quickly review. I don't think anybody's diving into this. So anyway, this is a chart of basically a great deal of the things that you could possibly be invested in and where that stands due to based on inflation basically and on a risk adjusted return. So we have inflation line here. You can see that a lot of these investments don't even beat inflation. And then there's only three things right now that really outpace any of this inflation and are favorable on a risk return basis. So we have gold, the Mag 7, which is basically the top seven in the S&P 500, and Bitcoin. And you can see Bitcoin is way the hell out here. It is absolutely just a god. Like there's nothing else to invest in. What would you invest in? Bitcoin. So that's basically the major lesson for this cycle is just start DCAing into Bitcoin. I did a um, price experiment with Bitcoin earlier where I was like, what would happen if I was back in 2017 if I would have bought the very top and started DCAing at the top? What if we're near the top and I start DCAing? Like, should I be afraid of that? And the answer is no, because since 2017, from then until now, if you did $100 a week and just bought at the end of the week, you would have made 200 some thousand dollars. Like you'd have been up 500%. Your total investment would be somewhere around $40,000 and you would have like $225,000 in that account. You would have done a 5x on your total investment. Now, of course, from the 2017 peak, you're way more than a 5x. And from the 2017 bear market lows, you're way more than a 5x. But I'm saying the entire chunk of money that you put in just by dollar cost averaging, even from the top, you are way ahead. And you just continue to do that. Honestly, it's the easiest strategy you could think of. And you wouldn't even have to mess with any of the stuff that we're doing, right? I wouldn't have a channel. Why do I even have a channel? So anyway, the other thing that's interesting is Aerodrome is going to be, or Coinbase's liquidity is going to be on Aerodrome. And so you can start now just the early signs that Coinbase is starting to promote their layer two, and Aerodrome is going to be a major beneficiary of that liquidity coming in. And I mentioned Aerodrome quite a long time ago. And as we'll get into the charts later, we can see that we're actually seeing some pretty positive action from the lows. And the other thing that I want to show you, if you're worried about being too late, is this is the adoption of the internet right here, and this is the adoption of Bitcoin. We're very early. Now, the rate of this adoption is actually faster than the internet, but you can see that we're still very, very early in Bitcoin's adoption. So there's major upside left. Yes, we can make some money in the altcoin season when and if it comes. It's still an if. I believe it's coming. But it's one of those things where just go with what's really really working, and right now that's Bitcoin. I can say if you just dollar cost average into Bitcoin over the next 10-15 years, you're going to be really happy that you did, and your kids and your grandkids are going to thank you. And if you don't, they're going to be like, well, what the hell were you doing? That's kind of how I see that. All right, let's dive into a couple other charts. um, we talked about the USDT dominance. The other thing I wanted to show you, something that I like to do, these are called spaghetti charts, is what I call them if we're still on it. Yep. And let's see, gotta load up. Okay, so I have it projected here from the April lows, and this just gives you an idea of like what's performing off of those lows and how does it relate to Bitcoin. So I started with a Bitcoin chart, and then I added this little plus sign, and then I just added any symbol that I cared to that I want to track. And as we can see from the lows, absolutely killing it is Hyperliquid. So like this is showing a lot of strength, and Aerodrome. That's another reason I wanted to mention that Coinbase thing. We're starting to see some more action on Base, and also the liquidity on Base has maintained itself pretty well. So those are really positive signs. So you can just add any token that you want on here, any coin that you want, and see how is it performing to Bitcoin. Anything that's below Bitcoin, you're not really going to be as interested in. We have things like Jasmy and GRT and Pendle right now. And it doesn't mean that this is a forever thing, but it's something if you continuously do this through the cycle, you're going to see, how do things relate to Bitcoin? How do things come off the lows? Or at least in this next rally, what can you expect to see? So right out the gate, we had Hyperliquid, and you could have seen that early on, and now we're sitting at a 2x from the lows. And so if you would have kind of caught that early, that would have been, you know, a good sign. So let's turn this actually into an hourly, because now what I want to do is I want to bring things up to this most recent dip that we have to see what's performing now. So now we can see, whereas before Jasmine wasn't performing as well, it's actually, and these are crazy numbers. We're talking like 2%. So the clear outperformers are Clearpool and Hyperliquid. Hyperliquid still maintaining very strong, and we can see that things like Beam, Prime, SUI, Axel, VRA, Pendle, these are all things that are not outperforming Bitcoin at this stage. It's just something that I like to use to see. You can also use their Bitcoin pairs, but this kind of gets everything bundled together, and you can see what kinds of things are outperforming Bitcoin. When we get to the point where off the lows, it's just complete garbage trash and it's majorly outperforming Bitcoin, that's going to be a warning sign. But if there are strong things like Aerodrome and Hyperliquid, AOS, Clearpool, things like that, those are kind of small caps, but typically that's going to be a strong sign. So that's just another tool for the tool belt. If you want to see how things are performing against each other, you just click the plus button, add as many as you want, and it's going to give you a chart like this, and then it's basically going to give you the results from whatever time you started on. So I drew a line basically where that most recent dip that we had, and then it gives us a clear winner, right? So Hyperliquid's the clear winner and has been the clear winner for a while. So and I've been talking about that on the channel for quite some time. Okay, diving back in. Like I said, we had a lot to get through this week, and maybe it's a little too much, but the last hopium here on the others dominance, and we'll get another thing for the Bitcoin dominance. Let's go on a monthly. So we've been in a bear market for quite some time, as you can clearly see. But just like I use the 50% tool for price, you can use 50% for time. And so that's very interesting. So we had kind of a bull market in the altcoin space for quite some time. So we had 93 months to the upside. And so dividing that in half roughly be like 45, 46 months to the downside. And that comes in 5, which is pretty interesting because you can see in previous years, November has been kind of the start of pretty aggressive altcoin seasons. So maybe we bleed here, getting everybody out of the market, and then we just rip in November. And so we're just going to have to see how that plays out. If this time resistance right here is going to come into play, and maybe November, just like before, we had November right in here. That's where altcoins took off. November back in here, altcoins took off. We'll just have to see. And actually, in let's see, or was it the most recently? I guess I'm not going to find it on this. November. Yeah, November right here. So you got to zoom in quite a bit. November right here, we had a little to the upside. So anyway, November seems like a significant time in the altcoin space for things to take off. That doesn't mean that we're not going to see any price appreciation until then, but these are just time frames to look out for that I wanted to mention. And as well, diving into Bitcoin dominance, just as oh man, this is a super messy chart, but I wanted to point out, everybody thinks that it's different, right? Everybody's like, oh, this time's different, this time's different. If we measure from the low to the high right here, that was 36 months, right? Let me just drag that on over here to the low here. So we from the low to the high, it was 36 months. Okay, well, this was the low, from the low to the high, 36 months. Again, now this actually takes us out into, September of 2025. So that September, October, November area, basically Q3, is when we're kind of starting to see some different time frames line up. So that will be interesting to see how that plays out. I'm just bringing this to the attention early. Everybody's like, oh, it's different this time. Everybody's been waiting and waiting for Bitcoin, myself included, waiting and waiting for Bitcoin dominance to fall. I think because they've been measuring it from the halving, which is, I think, out the window. If you're using the halving cycles anymore, I think that's out the window. I think it's been out the window for a long time. It's not going to help you. It kind of marked this downturn, but then we were immediately to the upside. But if you had just gone here and measured, oh, top to bottom, 36 months, okay, bottom to top, 36 months, you'd have had this time frame out here waiting for months and months and months. And you maybe, you'd be a little bit more prepared. The entire market was is just been waiting for Bitcoin dominance to fall, and you have the most blaring, easy thing to measure from low to high, 36 months. Okay, great. Measure out 36 months from here. What does that get us? September of this year. So maybe we don't see Bitcoin dominance fall until September of this year. And everybody's basically going to be saying this entire time from then to now that it's over, it's failed, this time's different. It's just very interesting. The other thing you have on the opposite end is, oh, this time's different. Bitcoin's going to go up forever. Bitcoin's only going to go up. There's no more bear markets. This time is different. These are all things that you want to fade. You want to fade that kind of analysis as quickly as you can. Okay, the last thing I think I have for you. I know this has been a long video, but there's just a lot of information that I wanted to cram into this video because, yeah, there's just a lot going on, and then things have been quiet, and so it's given me a good time to it's giving me a lot of time to go and kind of check out the charts. And that's really what you should be doing during these times where things are boring. You should be going out and doing a little bit of research, kind of like I've been doing, and just to get a little bit better bead on the market and see what you can find. Something I wanted to bring your attention. This is not my analysis, but Ben Cohen talked about this, and I just thought this was absolutely incredible insight here. Oh, and one more thing with with the Bitcoin dominance as well. It's a very similar thing. So if we draw a line here, let me maybe make that white even just to make it pop. When the 200-week moving average crosses the previous cycle high, that very closely marks the top of the Bitcoin cycle, right? So let's do that again. Marking the top, drag that across. And now this one didn't quite get you. This one was a little bit delayed. Let's see, park it right there. But not bad. Not bad at all. I mean, you're within, let's just measure it. You got out within, whoop. You got out within 70% of the high, which seems like you're missing out on a lot, but this whole rip and run was a 2000%. So you missed 60% on the top, and you got out with, a considerable gain. So let's just do that for this cycle. Where does that put us? And do we have room here? Do we have room? Well, so far it seems like it, because right now, roughly 70,000, and the 200-week moving average is at 50,000. So we have, and this is a very slow moving indicator. So we have a lot of room to the upside. Now, because this signal is known, it could get front run, and maybe we don't make it as high this time. We'll just have to see. But I just thought that was very, very amazing. I mean, if you basically bought at the 200-week moving average and sold when the 200-week moving average crossed the previous cycle high, you would have absolutely nailed every single cycle. So it's just something to keep in mind. We'll have to see how the next bear market, plays out, and we may have a secular bear market where we may have prices below the 200-week moving average for a considerable time. I'm not sure, but I do know that those will be times to absolutely accumulate like crazy, because markets tend to go up. I mean, over a long enough time horizon, they just go up. Like, the cycle doesn't end, it just keeps going, right? The cycle didn't end, it just kept going. The cycle didn't end, it just kept going. The cycle doesn't end, it just keeps going. So yes, maybe we have a 3-year bear market, and Bitcoin hasn't gone through a housing crisis yet and hasn't gone through that rollover in the real estate market. So we're just going to have to see. That's not something to be afraid of. It's something to be excited about, because then we're gonna have so much more data to go by, and we'll be able to look at things like, oh, well, when the 200-week moving average passes the previous high, bam, now we're out. How does that react in the next bear market? Can we follow that same signal onto the next 18 years of a bull market? We'll have to see. The thing here that I can't believe that I can't believe that I never saw this or never knew this. Here, let me just go to a blank page here. This is getting ridiculous. Yes, I want to do it. This, I think, will be the last thing that I leave you on, because let me look at my list here. I know this has gone on a long time, guys. But what else are we doing? I mean, we're just waiting. We're sitting here waiting, and Yeah, I think I got everything there. Bam, bam, bam. Okay. Ba-da-bum. So let's do this. We'll put this on a weekly. And then I want to bring up I want to bring up, I want to bring up Bitcoin dominance. I guess I don't have it on this one. Yeah. Oh, okay. So yeah. So this is how you do this. This is a good learning example. So BTC dominance. I want to add that to the chart. So Bitcoin dominance. Okay. And I want to go on a new pane. I actually didn't know you could do it that way. That's very handy. And why don't we move it up? Move it up. Okay. So this is really interesting. And actually, we'll have to go to an ETH chart for this. Everybody's been waiting for Bitcoin dominance to fall because it's when Bitcoin dominance falls, like this, that we get rips in the altcoin market. You know, Bitcoin dominance falls, we get rips in the altcoin market. But I want to show you here how I might have to zoom way in for this one. Okay, so yeah, let's have to zoom in for this. Yep. Okay. So in a similar fashion, drawing a line from ETH's highs here. When it breaks those highs, we see when it breaks those highs, we see Bitcoin dominance fall. That was kind of an early cycle, so it's not as clear, but it becomes clearer as we go here. Let's do the same thing. This was the all-time high for the Ethereum the previous cycle. When prices breached that, let's do this. Prices breached, and we had Bitcoin dominance fall off a cliff. So, well, I mean, it kind of stands to reason that we may not see Bitcoin dominance fall until we see ETH prices breach new highs. That's what I wanted to leave you on. All these things kind of coming together, making us understand like, oh, it makes sense now that we haven't seen an altcoin season. We've all been waiting for it. But this quiet time is kind of giving me a little bit more time to go into that and be like, oh, you know what? We've had a structural bear market for altcoins for the last several years. No wonder it's been hard to make money in the altcoin season. And there again, why we didn't do too bad. We've doubled our account and we walked away with doubling our account while we've been in a structural bear market. I mean, you got to go with the trend. So honestly, it sounds crazy, but we would have had higher success shorting altcoins this for the last couple of years than trying to go long. And that might be about to change. That we might start seeing structural changes there where buying altcoins is going to work. Anyway, I'm going to leave you with that. Hopefully that was helpful. I know it was a long one. Leave a comment down below. Give me a like, subscribe, and we'll see you next time. Take care, guys.